7 safe dividend-paying stocks that all yield north of 7%, that all have at least somewhat of a safe dividend, but on top of that could be undervalued as of right now. Exactly which 7 stocks are these? Well, stay tuned to find out. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. The first dividend paying stock that's yielding well north of 7% that does have a safe or at least borderline safe dividend is none other than BTI, or British American Tobacco. Now, BTI has been selling off like crazy as of recently, as you can sort of see right here. The 5-year average as far as dividend yield goes is skyrocketing because of how much this dividend paying stock has been selling off as of recently. Now, BTI, as it sits currently, is yielding almost 10% starting yield, which is massive. But with that, you are, of course, getting sort of a safe, borderline safe dividend rating, which again is sort of to be expected, especially when a stock is yielding almost 10% starting. Now, BTI has been a small position in my long-term portfolio for years now. I don't like to hold too much as far as tobacco. I'm talking like BTI MO. I don't have that big of positions when it comes to that. I know a lot of dividend investors do, but BTI is pretty low beta. It's a massive company that's been around for a while, and not only has been paying dividends uninterrupted for 24 years, but also BTI has been raising their dividend for 24 years straight. Now, the dividend growth for BTI, at least over the last, say, 1 to 5 years, has been pretty slow. We're talking 2 to 3% on average, but over the last 20 years, over the longer term, this single stock has raised their dividend pretty substantially, especially for a starting high yielder. Now, like I said, where BTI is currently trading at just around $30, you're going to get paid around $3 more or less per year, 10% starting yield. For those investors out there that are looking for some higher yielding options, definitely check out BTI. And speaking of tobacco, there's another tobacco stock that's also on sale as of right now. We're talking about ticker symbol MO, or Altria, which is currently yielding over 9% starting, and this is due to the most recent sell-off we've seen pretty much over the last 6 or so months. Now, Altria, just like BTI, is low beta, does have somewhat of a safe dividend, borderline safe, which I think is pretty accurate. I don't think MO is going to cut their dividend anytime soon here, although I do think it's possible if something crazy happens in this space over the next 5 or so years. But if you are willing to take upon that risk, you could get exposure to a single stock that's not only been paying, but also growing their dividends for 54 years without a reduction. And as far as dividend growth goes, over the latest, 4.3%, which is not bad whatsoever, especially for a single stock, yielding as much as it does starting out. Over the last 5 years, you have 5% per year, and over the last 20, there's been some pretty slow dividend growth. All in all, as far as the tobacco space goes, I'm personally a bigger fan of Altria versus BTI. I do own both of them in my portfolio, and I honestly haven't added to either one of them. But as of right now, they both are on my watch list. If Altria dips down a little bit lower below my cost basis, I'll definitely grab a few more shares. The next single stock that's yielding way north of 7% is Ares Capital, ARCC. Now, Ares, where it's trading at as of right now, is offering a 9.19% forward yield. It's trading around $20 per share. Ares has had 13 years of uninterrupted dividends paid and around 3 years of dividend growth streak. Now, Ares is not necessarily my favorite single stock in the sector, but because it's trading where it is currently, it crossed through my screener, and I definitely had to add it in here. Now, if you're looking for a business development company with some exposure to some super high starting yield, definitely check out Ares. Another single stock, this one's a mortgage REIT that's offering a 9.74% starting yield, much greater than that 7%, with a dividend safety score borderline safe, is STWD, or Starwood Property Trust. Now, this stock is higher beta at a 1.44%, so this one might not be for the faint of heart. Now, the dividend yield shows that it is above the 5-year average, so this could be a good time to at least watch this one. Now, there's 0 years of dividend growth, so this one has been basically paying the same dividends more or less over the last 10 years, but it has been paying dividends consistently for 14 years without a reduction, which is pretty good. Now, Starwood's dividend yield is about 7% off the 5-year average, so historically speaking, this one could be offering a buying opportunity. Once again, if you're looking for some exposure into mortgage REITs, this one could definitely be one to add to the list. Next, a super popular name for more of the dividend income focused investors, we're talking about ticker symbol BCE, or the Integrated Telecommunications Service, company that's offering an 8.64% forward yield. Now, at least historically speaking, this is one of the higher yields we've seen this stock offer over the last 5 years, so it is undervalued, at least going off of that. Now, as far as dividends go, dividend growth, etc., we're talking 15 years of uninterrupted dividend payments, 15 years of dividend growth, so the stats are pretty good as far as BCE goes. We got around 3 years of dividend growth over the last year, 5 years over the last 5 years, and 6% over the last 20 years. Now, this is of course a Canadian company. I do know a lot of dividend investors out there in Canada, and I would love to know in the comments down below if you're adding any shares of BCE as of right now. The next single stock yielding well north of 7% is EPR or EPR Properties. Now, EPR Properties, it says, is leading diversified experimental net lease real estate investment trust specialized in select enduring experimental properties in the real estate industry. Now, EPR crossed my radar years ago. I have owned this one on and off over the years. I don't think I own any as of right now, but EPR, where it sits currently, 8.21% forward yield, dividend safety is of 50, so borderline safe. The beta is relatively low. And as far as dividends go, it is sort of a mess. There was a dividend cut back in 2020, but to be fair, everything was shut down and it was very hard in the company. But since then, 2 years of dividends, and hopefully EPR can keep recovering from here. If you want some exposure in specialized REITs and you want to get paid a hefty dividend for doing so, definitely add EPR to your watch list. Now, last but not least, the final single dividend paying stock that's yielding over 7% that I think is definitely worth looking into is none other than ticker symbol ET or Energy Transfer. Now, Energy Transfer is one of the most famous dividend stocks across the community, and this one's been popular for years. I would even go so far to say that a lot of you guys watching this already probably have some shares of ET in your portfolio as it's current. But where ET has been trading at as of recently, it's offering a 7.91% forward yield. The dividend safety score is 50, so borderline safe. I think that's pretty accurate. The beta is super low. And as far as the dividends go, there was a dividend cut. This was back around 2021, but since then the dividend is back to where it was trading prior to that, and hopefully moving forward it will continue to recover from here. Now, Energy Transfer has been in my portfolio, like I said, in a small portion. I'm a much bigger fan of ticker symbol EPD, but Energy Transfer is definitely one to look into. This one back in the day was really popular when it was yielding above 20%, if anyone remembers back to that. Energy Transfer could be a good option to look into though, for those investors that are searching for some yielders well north of 7% that also do have at least somewhat of a safe dividend. So there we have it, 7 somewhat safe, cheap dividend paying stocks as of right now that are all yielding way north of 7% starting. Now, out of every single stock we went through in today's video, I want to hear from you guys down below, which is your number one favorite stock that we went over that's currently yielding north of 7%? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.